Are you tired of guessing in the stock market? Getting caught between all those confusing headlines about bull runs and bear traps? Well, what if I told you there's a time-tested, really powerful system for seeing the market with total clarity? A way to actually understand a stock's entire life cycle, from its birth to its eventual decline. Let's dive into Stan Weinstein's 4 market stages. Right off the bat, this quote from the legendary analyst Stan Weinstein just hits you, doesn't it? It cuts right to the heart of the problem. We've all heard buy low, sell high a million times. It sounds so simple, but like he says, it's not a strategy, it's just a cliche, and honestly, it's one that often leads investors down the wrong path and completely blinds them to how professionals actually play the game. So, let me ask you, have you ever felt that frustration? You buy a stock and you're excited, only to watch it just fall. Or maybe you sell and then boom, it takes off without you. That's not bad luck. It's because you're probably playing by the wrong set of rules. See, the average person is guided by gut feelings and old sayings, but the pros, they're playing an entirely different game. Yeah, most of us are told to focus on things like the news or PE ratios or, and this is a big one, trying to buy a stock after it's already fallen. But the pros, they know this is all just noise. Seriously, by the time you read that big news story, the market has already reacted. It's old news. So instead of guessing, they learn to read the market's own story, which is told through just 2 things, price and volume. So what is that story? What's the secret language of the market? Well, Stan Weinstein figured out that stocks, entire industries, and even the market as a whole all move through this predictable 4-stage cycle. I want you to think of it like the 4 seasons, right? There's a spring for planting, a summer for growth, a fall for harvesting, and a winter to lay low. Understanding these stages, well, it's the key to everything. And here they are. Stage 1, the base. Stage 2, the advance. Stage 3, the top. And stage 4, the decline. That's it. Every single stock moves through this cycle again and again and again. The secret isn't about having a crystal ball to predict the future. It's simply about identifying which stage a stock is in right now. All right, stage 1. This is the quiet phase. It's kind of boring, actually. After a stock has been falling, it finally just stops going down. It just moves sideways, looking like it's going absolutely nowhere. This is what we call the accumulation period, where ownership is slowly, quietly shifting from all those frustrated, fearful sellers over to the patient, smart money buyers who are starting to see some real potential. And then this happens. Stage 2 is where the party starts. It's the dynamic uptrend. The stock finally breaks out of that boring base, and it usually happens on a huge surge in volume. This is the markup phase, and the trend is clearly up. For us as investors, this is the sweet spot. It's where the most profitable and, believe it or not, the lowest risk gains are made. Now, after that powerful stage 2 advance, every stock eventually enters stage 3, which is the topping phase where it starts losing steam. And that leads directly to this, the punishing stage 4 decline. This is where a stock is just bleeding out, living below its key moving average and making a series of lower lows. And this is precisely where amateurs get absolutely destroyed. They see a stock that's fallen and they think, oh, it's cheap, it's a bargain. But really, they're just trying to catch a falling knife. The pros know to stay far, far away from this. Okay, so this all leads to the million-dollar question, doesn't it? When you've got these 4 distinct stages, where is the single best, lowest risk moment to actually put your money to work? And boom, here's the answer. The ideal time to buy is right at the very beginning of stage 2, that specific moment when a stock breaks out from its long stage 1 base. It's that point where all the sellers are exhausted and the buyers finally take control, signaling the start of a brand new uptrend. This isn't about buying low, it's about buying at the right time. So how do we spot these stages without just guessing? Well, Weinstein's #1 tool is the 30-week moving average. Don't let the name scare you. It's just the average closing price over the last 30 weeks. That's it. What it does is smooth out all the chaotic day-to-day noise and show you the true underlying trend. If that average line is pointing up, you're probably in stage 2. If it's pointing down, you're in stage 4. It's your objective guide. No emotion needed. But knowing when to buy is only half of it. We also have to know what to buy. And for this, Weinstein used this brilliant top-down approach to stack the odds completely in his favor. He called it the forest to the trees strategy. And the process is so simple, but it's incredibly powerful. First, you analyze the forest to figure out the trend of the overall market. Because if the whole market is unhealthy, you just stay on the sidelines. Simple as that.
Second, you look for the strongest trees. Those are the industry sectors that are outperforming everything else. And finally, only then do you go searching for the healthiest leaves, which are the absolute best individual stocks inside those leading sectors. And as Weinstein himself said, the individual stock is actually the last thing he looks at. Think about it. A great-looking stock in a terrible sector or a bear market, it's like trying to swim upstream against a powerful current. This top-down process makes sure you are always investing with the market's most powerful forces at your back.
Okay, so having the right strategy is half the battle, for sure. But the best system in the entire world is completely worthless without this one final, crucial ingredient. This is what really separates the winners from the losers over the long run: ironclad discipline. These are Weinstein's non-negotiable rules. They are designed to do one thing, and one thing only: protect your money. Notice how they're all designed to keep you out of those dangerous stage 4 stocks and focused only on stocks that are already showing strength. Violating these rules is basically how you get yourself into big trouble. And this really highlights the huge difference in mindset, right? The amateur buys a falling stock, just hoping it'll recover. The professional buys a rising stock that has already proven its strength. The amateur is driven by fear and greed. The professional is driven by a disciplined, proven system. It's a night and day difference. This leads us to a really counterintuitive but incredibly powerful insight. Winning in the market isn't about being right all the time. Nobody is. It's about making sure your wins are big and your losses are small. Learning how to take a small, quick, unemotional loss is just the cost of doing business. Seriously, it's the skill that keeps you in the game long enough to find that next huge winner. So I'll leave you with this question. Instead of just guessing, what if you had a clear map? Instead of just hoping, what if you had a clear set of rules? How would applying a disciplined, stage-based approach like this fundamentally change the way you see the market?